Good evening, folks. Frank Zarilla here, Zor Capital. The 8th of November, 8:30 at night. I'm going to go over my daily watch list like I've been doing over the last weeks or so. But first, before we get started, let's take a look at what's going on underneath the surface. If you're on Twitter, StockTwits, I mean, you've probably seen a lot of people talk about the negative divergences, how individual stocks are not really showing what's really going on. The indices are not showing what's really going on with individual common stocks. And here's what people are talking about, okay? If you can see here, 1 month highs today, 394. 1 month lows, 998. 3 month highs, 306. 3 month lows today, 338. More importantly, take a look at the chart of 1 month lows, so you can see what people are talking about, what's going on underneath the surface, okay? We've had a pattern of higher lows for the most part ever since the beginning of October, where we've been having a steady rise in fresh 1 month new lows. Just steady. And that just tells you, or it tells me, excuse me, the reason why I don't have many names on my watch list. We had 3 this morning. We had 3 yesterday. We barely had any names. Stocks are not triggering. Those that are triggering are not following through. And here's the reason why, okay? Individual stocks, a bulk of them, are not working right now. The indices, Dow 30, the QQQs are being driven by a few stocks. That's working, okay? If you take a look at 3 month lows, same exact pattern. We're seeing here just a pattern of higher lows. So we have more lows expanding over the last few weeks, starting at the end of September. Okay. Before, years ago, probably before 2009, when you saw this type of pattern and you saw the indices holding up so well, you can go out there and actually take a short and short the S&P 500, the QQQs, the Dow Jones, and and normally, typically back then, the indices will catch up to what was happening underneath the surface. That's no longer the case. So let's go to the watch list. This morning we only had 3 names on the list. Skechers did not trigger. OPNT. It got above the trigger price, but some of these stocks that are not that liquid, they might trade above the trigger price in the first few minutes of trading, but they'll, this one stock, OPNT, had a 90-cent spread. You can't take this trade. And the same thing with ANAP. First couple of minutes of the day, 9:30, 9:35, it triggered. It was above that price, but the stock had a $1 spread. You can't take that trade. So today, none of these stocks triggered. And what we're looking for is very simple. I'm a believer that stocks move in short-term momentum bursts, which means that we're looking for stocks that have high momentum, that are trading sideways for 10 to 15 days, and we're looking to catch a second leg higher. I'll give you a perfect for instance or example. ZYNE, something we took recently. Here's a fresh momentum. Stock goes up 100% in the back of some news. Stock goes sideways. We got involved here at 10:03. Stock goes up 15% in a matter of 3 days. That's what we're looking for. Here's another one, QURE. Fresh momentum stock consolidates, trades down 3 days in a row. Inside day, we got involved here these 2 days here, and also here. Stock goes up 10% in a matter of 3 days. So these are the things that we're looking for, and sometimes they don't always work out. We got involved with Netflix, okay? We got involved here, 199.32, went as high as 202.48, and it broke down. But the point is that we're looking to buy contraction in names that have a lot of momentum. And when you're buying contraction stocks that stocks or charts that are exhibiting this type of tightness, it doesn't take much to tell you when you're wrong. It's just that simple. When you're buying something, for example, when it's up 4 or 5 days in a row, like for example here when Netflix went up from 180 to 196, people were getting all excited. When you're buying these type of setups for the short term for a swing trade, more likely than not, you're going to experience some type of sideways action, and you're not going to see that burst that we typically look for in stocks. So remember, don't chase, buy them tight and sell them loose. So for tomorrow's list, SKX, we still like the stock. Had a big day on earnings, and the earnings gap, it's done nothing but go down. It's been, you have a pattern here of lower highs and lower lows, and printed an inside day and very low volume. We like the stock going to 31.12, buy stop 31.22. You want to give it some room and give it to this low, $30 as far as your stop is concerned. OPNT, we like this chart. I like this chart. I like it a lot. The stock and the whole sector and what they do, it's in the news with people abusing pain medication. This stock is one of these companies that they have something for that. The problem is that it doesn't trade much volume. But I like the chart, and I like the stock going through today's highs, 36.77. The problem is it's very illiquid, and in the morning it trades with a very wide spread. LJPC, here's a biotech stock. It's got a great weekly chart, okay? You can look at the weekly, nice cup, nice handle. It's starting to tighten up a little bit. The daily looks a little sloppy, but I like it here going through 35. The MAs are hugging 10, 20, 50-day moving averages are hugging. I like the stock. The only issue is that if you get involved with this stock, you need a wise stop. You need a wise stop because this stock is a little sloppy. But for all intents and purposes, I like this trade for tomorrow going through 34.76, very small size. Buy stop at 34.86. And I think you have to give it all the way down to 32 as far as your stop is concerned. EHIC. This is typically what we look for. Here's a stock with fresh momentum, went up on some big news and heavy volume, 2 million shares, which is not a lot for most companies, but for this one, it was, okay, because this stock was trading roughly 80,000 shares before this news came out. The stock has been trading sideways to slightly down ever since. It's got to get above 1150, but I like this pattern. The report on the 15th, and we might see a little pre-earnings action. But the story is that the market for individual stocks has not been acting the way it was acting during the summer months. And we can see that with the underlying breadth, where we're seeing an expansion of new lows every single day. Typically, like I said in the past, the indices will catch up to the stocks, but it no longer works that way. So what's been happening more often than not is that the actual stocks have been catching up to the indices. So we'll wait and see. All right, so trade them well and be well.